Good morning. All right, 90 seconds, Bubba. 90 seconds. Actually, 1 minute, 56 seconds. Good morning, Forex.Today. Let's go. Never up. It's all crooked and it's all. Hey, good morning. All right, it's still weird. What's going on? What's going on? Anyways, hey, good morning. How are you? Welcome to my home office. Yeah. You notice I got rid of 2 of my screens. Yeah, I don't know, just trying something different. you know, what they say is less is more. It feels like less to me, but whatever. Trying to keep my mind from being cluttered. But, anyways, just trying some new things. What do you want to do? Man, it's Tuesday before the Fed meeting. We got a war going on. So is it all bad? Is it all good? Or is the worst over? Or could things get better? Really? We had a little bit of a risk on day yesterday, and we have chipped away at the risk offness over the last 7 days. And the overall score of risk has improved. So look, maybe helpful, maybe hopeful. So what we'll do today is we'll do some fundamentals, but we'll also go to the charts. We'll go to my Traders Way MT4 platform, and well, we can go through our routine. We could do some skippity scalpy on like oil. Oil's been great that way. But you tell me, you're the boss. I am a humble servant. My name is Wayne. You can call me Uncle Wayne. You can call me the Professor, Professor McDonnell, or you can just say, hey. But we'll do what we need to do to get you all squared away for today in our new New York session. So on the macro side, macro. Okay. Right now, our daily score is 1.12. And not good, but not bad. Overall, when we take everything to in account over the last 1 day, 7 days, and 30 days, and then weight them, you know, look, it's definitely still risk off, but look where we were relative to where we are. So it's bad, but definitely less bad. Mahai says, hey, I heard there's an emergency meeting at the Fed. No. They meet on Tuesday and they release their data on Wednesday. Hey, did I forget to do the disclaimer? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Just want to make sure I did that correctly. Yeah, everything's kind of strange today, huh? So anyways, that's our macro assessment. Okay. Yep. VIX has dropped significantly, which is important. Okay. This is so I added all this, by the way. I added some new love under here so you can get updated on what has changed. Yeah. So that's good enough for the macro, I think. What do you think? So we'll go to the charts. You like the macro, huh? Yeah. Well, then you got to convert that into charting. Do you know what you're bullish or bearish on? Hang on. Boy, the S&P 500's loving it, huh, on the open. Ooh, smoke. Hang on, I got to get over to that euro. And we'll see. Euro is strong. You probably know that. Gee whiz, Jiminy Cricket, the camera is off on everything. Okay, whew, let's go. So I said euro dollar. The first thing you want to do is look at euro versus everything. And if you look here, again, this is the Trader's Way MT4, and we have an indicator that measures the euro versus everything. Well, major, right? So euro versus pound and dollar and yen and Swissy and Kiwi and Aussie and CAD. And it says, hey, if you analyze the relative price change, you can determine, is euro relatively strong or relatively weak? Right now, it's kicking butt against everybody. Yeah, because it's versus it. What about our friend, the Euro Aussie? No, this is our buddy Euro Aussie has been paying like an ATM for quite some time. Is that still true? Now, you probably know the RBA had a meeting yesterday or last night. Yeah. And you can see the zippity doo dah, zippity, right? You can see the ball. They did raise interest rates. Okay. So we're right back to the lowest low from last night. And so even though euro is strong, Aussie looks great. Like, Wayne, that's not an Australian accent. Well, I didn't mean it to be. Crikey! She's a beaut! Nar! Nar! Oh, I like hanging with you guys every morning. So much fun. So anyways, we're there. So you really got two scenarios. Breakdown, pullback, or rise and then, right, sell high or let it break and pull back. But what about Euro Kiwi? Is it better? Maybe. This is the daily. Look at the consolidation. Mm-mm. On the hourly, there's a rise. On the 4 hour, there's consolidation. Be very interesting if this ends up dropping like a ton of bricks Thursday or Friday, maybe next week. What do you think? I don't know, but Australia is raising interest rates. There's no doubt about that. Euro dollar, I have on a trading template focused on price action. And you'll see right in here is the bearishness. Let's see if it's, see, I can do better. Let's do better. Let's do a real-time zero lag moving. Yeah, quite different. You see why I have that? The lagging one is above, the zero lag is below. Interesting. I don't know if it's any more helpful. Maybe you like the other one better, right? Yeah, it looks fine. So what we need to be looking at then is you connect this, and this is if you are a bear, Oh, thanks, Greg. Yeah. If you are a bear, you would be locking into something small like this, like a fiver, and you would look for selling. Right now, we have bullish continuation. Not a good time to sell. I mean, you can guess and you can throw down a trade, but if you want to be a degenerate gambler, go to Vegas. At least you get free drinks. Yeah, I was in Vegas recently, and I needed a place to sit with my laptop and work and trade and do all that kind of stuff. So I'm down there at like 5 o'clock in the morning in the casino. There's no tables with power plugs anywhere. So I sat on a particular slot machine that actually was flat in front of the screen, like I could use it as a table. And next to the slot machine was a power plug. So I plugged my laptop in. I got a cigar going, uh, right, and I'm in the casino with my laptop, the only one making money. And it was funny because the cocktail waitress, she comes by and she's like, "You need a drink, sweetie?" And I'm like, "Yeah, I could use a black coffee, but not in a paper cup," right? And all of a sudden it sounds like I'm in Pulp Fiction, right? Not no paper cup, right? I want a glass. I want a mug of coffee. She's like, whatever. So she swings on by. And actually, you know what? I think I even tipped her first before she even went and got the coffee. In my mind, I'm like, look, if you go to Starbucks, a coffee's going to be $12. This is Vegas, right? And you want about 5 of these coffees, right? So I tipped her really well before she even got me the coffee, and she just kept bringing coffee every every half an hour, another cup of coffee, and I was so happy sitting there that early in the morning. It was basically quiet. I'm drinking coffee. I'm smoking a cigar. It was so good. I highly recommend it, everybody. That's how you roll. And so, yeah, instead of sitting here pulling slots, uh, you would sit here and hold tight and say, um, I'm a bear. I don't know if you are, by the way. But you could be. You may want euro dollar down. I don't know. I'm not talking about right or wrong. I'm just saying you've made a decision based on logic and intelligence. Therefore, you'd be sitting here with your cup of coffee and your cigar and listening to your AirPods, waiting for this to turn bearish. Is it bearish now? No. Is it bearish now? No. Is it bearish now? Now you might want to drop into a 1 minute and really cut the corner here. Is it bearish now? No. Is it bearish now? No. Okay. Now let's back this out. Let me remove this so it doesn't get too chunky, but I just want you to see, like, it's not the dumbest idea in the world. I'm not saying it's the right idea, but you should be setting up an ambush. So now you're sitting here and you're like, is it bearish now? Is it bearish now? Cool thing is, if it turns bearish, you'll see that these lines, instead of being green support, it'll turn red resistance, and it'll actually say continuation, meaning continuation down, bearish continuation, not bullish. Cool. So now you can just pop a squat. Okay. But always make sure you have a strategy. Are you bullish or bearish? Looks like this is about a 618 from the high of the week. But look at that. Yeah. Are they? Yeah. Well, so now, see, you can't do that, Richard. Right? I like to pick on you, Richard, because I like you. you're you're tough. So it's not helpful to say, but the ECB is hiking, but hiking might be a bad idea. You just now you're somewhere in between, right? Yeah, and yeah, you don't. So you can be a bull. That's perfectly fine. I'm not telling you that you can't be a bull. But right now, there's like, well, the ECB might hike versus Australia is. Um, the United States dollar might be weak, but right now we're in geopolitical risk, which is a problem, isn't it? And that very often is a safe haven. But also, think about high oil prices and the petrodollar. You need more dollars to buy oil than you used to. So there's sort of an implied unseasonal, unusual demand. Maybe it aligns with normal demand. Maybe it aligns when there's usually weakness, when there's more supply, whatever. So I would pick a side because you can't always be right, but when you're right, you should trade. Don't try to be right all the time. This is why professional investors hedge. So when market conditions are favorable, they trade and invest as much as possible. And when the market conditions change and they're less favorable or not favorable, they hedge. Right? So I would just pick a thing like, let's say, I'll give you an opinion. Maybe it's my opinion, maybe it's not my opinion. That's not for me to share. But let's just say I'm long term bearish on the United States dollar for various reasons like the debt level. Okay, great. I'm a bear. But with geopolitics, I'm not so sure. And with $100 WTI, you're going to need a lot of dollars to buy the same amount of oil you normally buy. This would happen to Japan, for example. The world would have more yen and less dollars. Why? They have to give up more yen, to buy the same amount of oil. Yen weak, US dollar strong, because the oil sold in dollars, right? So, like, look, I'm not telling you that's right, Richard. But instead of like ECB hiking, ECB might not hike. I'm just like, just pick one. I don't even care as long as you can back it up, right? And you're like, the dollar, the US dollar is going to be strong. Why? Geopolitics. Okay, great. Makes sense. Totally makes sense. Sometimes you will be right and sometimes you'll be wrong. Now, if the markets move sideways, up and down, range bound for a while during during our situation, we'll call it, then sometimes you'll be right, sometimes you won't be right, and most of your alpha will be picking when to get involved. But you'll never have a giant move up unless something really terrible happens, and maybe that's why you should be trading oil. Or So anyways, what I'm saying is in the sideways market, half the time you're right, half the time you're wrong. And you would play your stop loss in a way to be the hedge. So if you're, let's say, instead of trading dollar, you're trading oil, and you bought at support, I would jam my stop and say, well, I'm not going to take profit on a $5 move because there's always the possibility the worst case scenario happens and you go to bed one day, well, I guess it would be evening, and then you wake up and oil's up $100. Well, that's your head. And you're like, I'm not in it for 5, I'm in it for 100. Oh, okay. With dollar, maybe something similar. But what I'm getting at is there are other periods, though, when suddenly, let's say something bad happens and the dollar gets strong as a safe haven flow. Now you got a breakout trend. Or if things return to normal, the dollar should weaken. In particular, if the stock market rallies on relief, now you get bigger moves versus sideways moves. And therefore, if you happen to be a dollar bull on a relief rally, yeah, you get knocked out or you take a small loss. But if you're a dollar bear, you get a runner. The payoff is bigger. Now, your risk should always be the same, where you're not risking more because you're going for more. You're going to get a lot of strikeouts. That's not cool. So you just sort of play the strategy you've decided to play. Pick a team, bull or bear, and adjust your expectations correctly. Sideways is okay, but you want to say, well, just in case, you should be directional, but sideways, but hope for directional, one way or the other, depending on what you think is likely to happen. You don't have to be right. You just have to be organized. Let's put it that way, right? Strategic. So if the ECB is going to raise interest rates, yeah, you know what? The euro is probably going to get strong. Yeah, that makes sense. Yeah, you mentioned that before, Greg. That's fine. Well, first of all, you're very, very experienced, right? You have decades. And so my messaging with stop losses have a lot to do, if not totally, with the idea that that the vast majority, 99% of our audience, are amateur retail traders. And trading naked like that is not ideal. So I'm always going to teach to be, risk averse, right? I tend to use stop losses as a fallback, and it sounds terrible, but like, let's say I place a trade, in particular, if, in scenarios of basket trading where I have dozens or over 100 trades open. And then suddenly I have a heart attack. I lay down on my office floor and I stop functioning as as a, as a reliable, coherent trader. Um, the stop losses are there to prevent catastrophic failure. Yeah. Now, the second thing is I want to ensure that I'm not afraid of taking a loss as well. I don't want to hang on for dear life. I think I started that way back in 1907 when I started trading Forex. Um, those are bad experiences, right? The hang on for dear life. I made that mistake, and doubling down, I made that mistake. And then somebody told me that was dollar cost averaging. That sounded really good. So that ended up being a mistake. Revenge trading, that's a mistake. So I've made all the terrible mistakes. And the sum of all of that learning experiences, there's one, there's a time when you're down 500 pips and you say to yourself, well, why didn't I just take the 50 pip loss? Why didn't I just take the 100 pip loss? And then there was even a time I think I was on my hands and knees praying to Jesus, Mohammed, Buddha. I threw Abraham in there just in case. And I'm like, please let me just take a 100 pip loss. Please come back so I only lose 100 pips. And you're like, dude, that just, yeah. I got a problem, right? I just can't function this way. So that's why in my book I say, take pride in your losses. 100 pip loss sometimes is fantastic. Why? Well, because the market changed, the market reversed, the technicals changed, something unexpected happened, and you should not be in that trade anymore versus praying for it to come back. Now, I think where a lot of newer traders, even experienced traders, go wrong with their stops is they jam them so close that there's a 90% chance they're going to lose even when they're correct. They say up, so they drop a 12 pip stop. It takes them out for a loss, and then it goes up 100 without them. Because it's just dumb. And then you're like, well, I can't afford the loss. Well, why don't you drop your lot size, son? Because that exposes right off the bat, you can't take 50 to 100 or even when I teach swing trading, it's 150 pip stop. And you're like, dude, I'd blow up my account if I took 150 pip stop. Well, guess what? Just like when I did a business planning retreat with myself, 20 years ago at that beautiful Ritz-Carlton, which I was just thinking about the other day. I'm like, I want to go back. But anyways, I get there and I do my 3-year pro forma cash flow statement, and I find out through my hardcore analysis that I'm over leveraged. So I immediately lowered my leverage. So if I say, look, you need to use 150 pip stop, and you're like, well, I'll blow up my trading account, or if I take 150 pip loss, it's 10% of my trading account. Well, you are over leveraged. You are over leveraged. You are not going to survive. You're holding the shotgun backwards. You're trading against yourself practically, because the odds of your success, in particular, if you're not very good at technicals and you know nothing about fundamentals, dude, and you're over leveraged. Oh my God. Right? So we got to fix all that. So I know what you're saying, Greg, and I don't disagree. It's just this is the context of everything of how I got to share this knowledge, in particular with an audience that doesn't have 3 decades of trading experience, right? Like you do, right? So yeah, that's how I deal with it. I'd rather you have a wide stop and a small lot size. And then you're like, but then I don't make any money. Well, why don't you get a job, save some money, so you're not underfunded, right? But really, the secret sauce here is a small trade that has almost no risk for you mathematically, right? And if the trade works out, you move your stop, and then you get another one, and then you get another one. And if you're actually trend trading, if you actually have like a thought process behind what you're doing, then guess what? You'll have plenty of time to slowly build a position. And this is how institutions trade. And the thing is, you might be able to get $1 million position, $10,000 at a time. Meanwhile, as you're entering, let's say you're only taking, let's say these micro lots or mini lots, you have 50 pip stops on them, right? Now you're only taking 50 pips of risk on a mini lot or micro, whatever you're doing. and then slowly build it up to $1 million position. But the thing is, you've never, ever, 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 ever taken more than 50 pips on a micro, even though you can afford a standard or you can afford a mini. But you start with macro, right? So you start with the micro, build yourself into a position of a mini lot, and then you keep going and you build your position into a standard lot. So now that's $100,000, but you've never taken more than $1,000 worth of risk ever, multiplied by the 50 pips. So really, then it becomes even less. So what's your real exposure? $50 into $1 million. But then you're like, but Wayne, it'll take me 6 months to build it up to $1 million. Like, why? You want to get rich quick? Yeah. And I also want to get rich easy. Yeah. Well, this isn't the fantasy that you're looking for. Again, if you want a fantasy, go to Vegas. That's where fantasies go to die. Forex, I swear to you, I was the only one making money in Vegas. When I'm sitting in the casino with my laptop, I look around, look at these jerks. Huh? I'm like, this is right? So the name of the game is very, 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 very low risk. And then building positions in the direction of a trend. So, for example, Richard says, hey, the ECB might be raising interest rates because of higher inflation. Now you have to say, well, is it short term or long? Is it short run or long run? Is it because of geopolitical risk, or is there inherent growth or inherent inflation inside of the Eurozone? Okay. Is the ECB going to jack up interest rates just because of high oil prices, because of geopolitics? See, it's an exogenous supply shock. It's not global demand stripping out supply. In that case, the ECB would have to raise interest rates to slow the growth down. It's a little different than raising it because oil prices are high. No, if demand is high, they raise interest rates. If supply is low, what the heck would that do? Right? So anyways, you have to make a decision. But then when you make your decision, and let's say you're pro-euro now, and you're like, yeah, the next 6 months of euro, I'm a bull. Now, TRADARS has a seasonality on that, so you can do all the research. When is the right time to buy euro? And against what? Who's going to be hurt by, let's say, high oil prices forces the ECB up, is your theory. Well, that would also potentially force the yen down. So maybe you just say, well, when does euro yen typically go up? And now you focus on a euro yen and you go micro, 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 micro. And if you got it right after 3, 4, 5 months of this, you have dozens of pissy little trades in which you've never risked more than really $50 at a time, but now you control $100,000 worth of euro yen, and you're doing all right. Well, that's how professionals actually do it. And if you're wrong, you just never really get the setups. They just never pan out. But there's never a bloodbath scenario with you being wrong because you know the rules of engagement. Is this support? Yes. Did it bounce? Yes. Can I take a shot? Yeah, take the next higher low. In. Oh, it made a higher low. A lower low. Oh, well, take the small loss on your little pissy little micro 50 pip stop. And now it's made a lower low. Do you buy it? No. You can't buy a lower low. You're a bull. And so you never really should be in trouble. But you gotta know your intent. Wow, that was way too long. Sorry, guys. All of that For a euro dollar? Have I told you that you're my euro? All right. Bitcoin. What you stink? So we've had a good run. The last several weeks we've had it set. Oh, and Greg brings up a good point. Yes, and you can hedge. You can. In particular if you're doing other things in other markets, right? So like in uh I have an option strategy that I do for endowments and charity. By the way, we had a meeting last night with one of the charities, and it was so good because they had way more money than they usually did. And they were almost like brainstorming, like, what the hell do we do with all this money? We could do this and we can do that, and we could put some money over here. I'm like, yeah, you're welcome. Which is good because they don't have to pay taxes. They're a nonprofit. They're a charitable organization, right? But it was so good. And then the other thing, because it was a finance subcommittee meeting, right? So the executive director was there, the chairman was there, the treasurer was there, and so working with the treasurer over the fiscal budget and the we were in the budgeting process. She had earmarked a projection for income in the upcoming year, which makes sense, right? And I'm like, how did you get that number? And she's like, well, I did it this way. I'm like, yeah, okay, I understand that, but let me give you my estimate, my projection for the year as far as investment income. And I did it down to the penny. And then I'm like, that's my estimation. Um, so why don't you take that number and then use your more conservative number, because this one I believe is realistic, but I know budgeting you should always do on the sort of the worst case or conservative side or whatever. So go ahead and make your decision on that. But here's the estimation versus, down to the penny. And it's so good to do that for a charity because we're trying to budget for the what is the charity going to do in the next fiscal year? How much money is going to be there? And so for that endowment to add to their budget, well beyond what the other stuff that the charity does to raise money is providing. I'm like, oh. I mean, it's a meaning, right? What we do here makes a meaningful difference to people, to yourself, to your family, to your neighbors, to your community, because you have this knowledge. And once you know, I think we have a responsibility to share, right? I flew to Vegas to do that. 3 hours of speaking cost me thousands of dollars to get out there with a hotel room and the meals and the flight. And I didn't get paid a dime. I was just there to share. I like to stand on stage and share. And it impacts the way my family invests and my friends and my neighbors. I do all the charitable stuff. And I think we have a responsibility because we do it from passion and knowledge. Most people just do it to make a buck. Well, and you know better. I think there's a morality to what we do. We're very, very powerful. We have a responsibility. let's do this. Bitcoin, we did this multiple times recently, but let's just follow up. Okay, double bottom, higher high. Let's do this in a different way. Double bottom, higher high. I don't care about the double bottom. I care about the higher high. I use an anchor, which I call hammock. And I do this little story about hammock. It's visual, even though it's verbal, it's visual. So my goal is for you to hear the word hammock, and then in your mind, you go through the story. And the story emphasizes the idea that you've gone through so much training that you can do this in your sleep. Now, that's not the full story, but for those that know the full story, that's the image. You're like, right? And I can say, hey, do you still visualize where you have to duck your head? And the answer would be, yeah, you probably do. Okay, great. So double bottom, higher high, hammer. You've been so well trained, you know precisely what to do next. Oh. Okay. New higher high. Okay. And this is the zone you should be ready, willing, and able. Now, this whole zone, it usually doesn't do this, but you know, with geopolitics and gapping and stuff like that over the weekend, because right. But anyways, so we have that, and I guess we should even do this even more specific. Okay, higher high. Okay, higher low somewhere in the green zone, and this is the target, guys, which is a higher high. So somewhere in the green zone is the new buy, and this is the target. So we didn't get there. Okay. And then what? We want a pullback somewhere around here, right? Well, we didn't quite get there, but we got close. And our target is here. And if we can get there, Bitcoin, then it's probably going to look like that later on. So this one worked. This one is, we just hit the conservative target. And 76,600 to 78,500 is the current target. So if you want to drop into a smaller time frame, be my guest, put our service to the test. Okay. So you can do this. Let's just flip flop. Let's flip flop over to, we're going to scalp this on, we're going to scalp this up on a 5-minute chart. Okay? So, riddle me this. Have you ever danced with the devil in the cool moonlight? No, wait, that's Batman. Sorry. Is this bullish? No. All right. So you sit there and ambush. Well, hey, Greg, I just noticed your comment. I think that the most important aspect of what you just said is that you're trend trading. You can use all kinds of strategies, tactics, we'll call it. If your trend is correct, like right now, for example, this is not bullish. if you've decided on a daily that you want to be bullish, well, I'd say that's not bullish. Yeah. So you have to decide. Are you fundamentally bullish? Are you inherently bullish? You think Bitcoin's going to 1 million? Cool. You have to make your decision. Okay. But if you are going to be a bull, you need a dip. And this doesn't look like it. Now, flip it around, bears. You're like, okay, that was a nice little rally. Okay. That was a nice little rally. There's resistance there, right, which is solid, horizontal, price action based resistance. The other one is a dynamic level of resistance using a moving average, but not your moving average. This isn't your grandpa's moving average. Oh, wait, this is your grandpa's. I was going to say this is a zero lag. No, that's right. This is your grandpa's exponential moving average. Okay, great. So if you're going to be a bear, this is fine. Okay. So really, we'll mark this as plan A, and this one up here, plan B. Okay, you ready? Drop into a fiver, and you should be selling high off these moving averages. In your mind, lower high, lower low, lower high, lower low. Okay. You can use a 15-minute chart if you want. It's been working beautifully. Dude, look at this. Continuation. It's been bearish now since this big rally in Asia. Cool. Do you think it has anything to do with that daily EMA I showed you? Dude, it has everything. Remember, this is the daily. This is why if you don't start on the high time frame, you're just blind. So, hey, cheer up. Drop into a fiver. Yeah. Take it down. Go, just. Yeah. You guys like this scalping template? Again, the plan sometime very soon is you sign up for TRADARS. Then you link your Trader's Way account to TRADARS so you can do your execution through us. You'll get a discount on the spread. Yeah. And I give you the chart template. Not just this one, dozens. Dozens. With hundreds of files that automatically get installed for you. Yeah, easy peasy lemon squeezy. Not bad. Hey, Wayne, I get your entire charting package and a discount on my spread. Yeah, you get a rebate on your spread. Cash money put into your account every day. Oh, what's not to love? Huh? TRADARS, Trader's Way. So there's your biddy. Have you been watching the rip? Not that thing. What's their faces? I thought wasn't very good. Yeah, what do you think? You gonna trade the rip here? $1.50. You think the psych level might do it? Well, drop into a Cinco. And is it bullish? No. Is it bullish? No. Is it bullish? No. Is it bullish now? No. Is it bullish now? No. Will it turn bullish? I don't know. Maybe Ripple just falls to zero. I don't know. But if you're like, hey, I think 150 is going to act like a psych level, supportive psych level, after a drop consolidation and then suddenly a higher high, and now the pullback creating a potential higher low. Okay. Okay. You see? And you're like, well, I wonder, it's a hypothesis. I wonder if this level is going to act as support. Cool. So now you just find your time frame, drop into a fiver, let's say, and say, if it turns bullish, I'm going to take the higher high, the higher low. It's going to tell me, it'll even label it green and say continue. Okay. Now it did it here and it didn't continue. Well, maybe your time frame's too small. You're too aggressive. Okay. But you wait. Okay. See, look at this. Green continue, green continue, green continue, green continue. Nice. Red continue. That's where we are now. So on a 15-minute, you sit here all day long not losing money. Yeah. Have I gone too long today? You guys want to do another one? Let me know if you want to do gold. Gone pretty long today. Yeah, I know it's only 10:30 in the morning, but I've had a liter of energy drinks, a liter of mineral water, the kind with all the, not just your mineral water, but I got everything in there. 35 servings of vegetables and fruit. Then I've had a liter of coffee, and they're all empty now. Like this I have two mouthfuls left. So if I'm on jibber jabber mode, I apologize. Huh? Gold? I need. Are you guys? Do you want gold or no? Type in gold if you want me to do gold. If we're done, yeah, I'll move on.com. Just in case we are done, you're done. I'll tell you what. Tomorrow is the Fed meeting, and so I scheduled our morning live stream here. Instead of being at the open, I scheduled it for the Fed meeting. Okay. Oh, there is. Okay. Quite a lag on YouTube today. Looks like almost a full minute. Maybe I need to refresh my studio page. Maybe it's the laggard, not you. All right, so we want some gold. Let's see if I can do that for us. I'm wearing that shirt right now. All right, gold, 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 gold. June. By the way, WTI is tickling 95 right now. Okay. Here we go. Bada bing, bada boom. Okay. We are bears. We dropped it to 5K and we're stuck. It could potentially go to 4,850, although 4,900 is more supportive. Right now, what I've drawn is just simply the cycle level of 5K. Is that enough? Yeah, it might be. But I wouldn't be bullish yet. Okay. And you are in somewhat of a sell zone if I zoom in. Okay. You are supposed to be, if you're a bear, selling between the 2155. Okay. So right in here is your current sell zone. Okay. The other thing to be eyeballing if you're trading this, high, lower high. Okay. So you pick a team, do what you got to do. Okay. And maybe you drop into a fiver, drop into, and wait for a red continuation since you're a bear. What you're trying to do is that okay? If you want to change that, I'll show you a little hack here. You go to indicators, price action pivot points. It's something that is mine. And you say, I have this set for an hourly chart. So I said 24 hours. But you can make up a longer number, a bigger number. A 144 5-minute candles. Is that too many? Maybe it's too many. 89. Let it do the calculations. Takes a little bit. It's a lot of calculations. Not responding. Wait for it. It's thinking. AR, that's in TRADARS on the seasonality. All right. So you could say based on the current trend, bearish, not bullish, right? And the next thing, if you want to be more conservative, is you wait for a red continuation to form, and it'll label it for you. Okay. And of course, it'll do it because lower low. And then what do? Take the lower high, right? But this is what we've had planned now for, is it 2 weeks or 3 weeks? Well, do you guys want to watch this for a while? I'll just play some music and we'll watch it. We'll watch it and see if it turns red continuation. It gives you the another level of permission to engage if you're a bear. Let's do a headline update.
Oil, supply risks and reserves shape outlook. Commerzbank.
Defying the doom and gloom. How Bitcoin keeps surviving every global crisis.
Pound yen holds steady as traders eye Bank of England and BOJ rate decisions.
U.S. Director of the National Counterterrorism Center resigns over Iran war.
US dollar, Canadian dollar, range holds as fair value diverges. Scotiabank.
U.S. pending home sales unexpectedly rebound in February. Gold debasement trade faces policy headwinds. TD Securities.
United States pending home sales year over year fell from previous 0.4% to 0.8% in February.
Little slow today. We're updating the training section. I think it'll be fully up and running very, 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 very soon. Like today. Look at that. Good comeback. So we're turning the spike radar into a more traditional calendar, but then with detailed spike analysis for our core events. Have you guys checked this stuff out yet? The conviction heat map and the contrarian opportunities? It's suggesting sell Bitcoin. Sell the rip. It says right there, sell the rip. It's cool, right? So again, the question here is 5,000 psych enough to hold it up? Yeah, maybe. We're looking at this from a bearish point of view. You might be looking at it from a bullish point of view. Perfectly acceptable either way. Yes, Dennis, it's fixed now. Go ahead. Aha. That works. So this should work. Yeah, no, thank you. Best part of Forex, huh? Sitting and waiting. I'm going to turn the squawk box on, which means I'll turn the music down a little bit. And I'll turn our squawk box on. Oh yeah, here. And so we can listen to the news as we're trading. US dollar, Swiss franc technicals. The US dollar Swiss franc rotates lower, but running into dual technical levels.
Aluminium, Gulf cuts tighten supply outlook. ING. Oil, supply risks and reserves shape outlook. Commerzbank.
Defying the doom and gloom. How Bitcoin keeps surviving every global crisis.
Pound yen holds steady as traders eye Bank of England and BOJ rate decisions.
U.S. Director of the National Counterterrorism Center resigns over Iran war.
US dollar, Canadian dollar, range holds as fair value diverges. Scotiabank.
U.S. pending home sales unexpectedly rebound in February. Remember, the issue at play here is the psych level. If you get through that, remember, we already outlined the targets. In your index templates. Yeah, I don't know. Mind chain. Maybe you have to click visualization all time frames. Maybe.
Australian dollar, positive terms of trade offsets geopolitical risk. TD Securities.
Yeah, Stevie. Oh, for show. See, what I have here is trend on 2 time frames. Look how beautiful this is, isn't it? Dude, seriously, huh? Oh. Look at this little consolidation from April to August. And then there's the breakout. 1, 2, 3, 4, 5, 6, 7,
Macron
8
says they will
weeks.
participate in Hormuz mission, but it would need Iranian coordination.
9, 10, Tech 11, stocks show mixed signals. Gains in financials and consumer cyclical sectors. So it was up for 22 weeks. So this is why I always argue, like, why be a scalper? This thing went up out of 22 weeks. It had 3 bearish candles. These I wouldn't even call bearish. 3 out of 22. Pretty compelling, that 5K, huh? Anybody getting hungry? Yeah, if you're doing Forex right, it's boring. Yeah, it's almost 11 o'clock in the morning here, and I haven't eaten. I've had broccoli. I've had broccoli. What a good, what a good diet. Just looking at the current heat map here. Yeah. Look at that. It's kind of nice. All of a sudden, Nazi's hot. Oil Ripper.
Pound.US dollar price. Analysis: Pound extends gains as traders eye Fed Bank of England decisions.
Whoa, 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 whoa.
Pound.US dollar.
Smoking hot like fire. Right off the right one standard deviation. Yeah. By the way, I'm going to move the 55 to a 21 or a 34. Yeah, that's what I'm trying to do. Still not set as bearish continuation. So we drop below 5,000, $10. Are we going to drop all the way down to 5K and below?
Euro, US dollar, sentiment-led recovery extends. Scotiabank.
So here we are, just listening to music, listening to the news as it comes out. Bum, 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 bum. Just skippity the gold date. Now 5,007. Yeah. And just so you know, the what I XRP slides as retail interest climbs.
Why US dollar is the only safe haven in FX.
What I teach when it comes to trading gold is my preferred time is somewhere around here to start trading. Isn't that neat? If you're going to trade gold exclusively, this is a great time of day to start. So we were bearish many days ago. So you would start your day with like, I wonder if that's going to be resistance. And right here you see the continuation. Cool. And then here's another red continuation. Red continuation, right? No red continuation yet. But, right, this could have been your first and only trade of the day if you were already a bear. Okay, another hesitation at the 5,000 psych level. Obviously, bulls are buying. Biddy's on the move. Litecoin looks
Euro
enough.
pound holds steady as markets await ECB, Bank of England policy decisions.
So, and then here, Ripple hit the 150 as we were eyeballing. Now at 152. So let's go back to the fiber here. Okay, so you have to decide, is that a higher high? Green continuation now, giving you permissions to buy the dip. You see, right here. So this is what we planned out a half an hour ago now, maybe even closer to an hour. Now you got permission to engage if you're a bull. Go to Bitcoin. There's our green continuation. And you even had a pullback already. Yeah. Litecoin looks interesting. Here's a roll reversal on a 4-hour. Ethereum kicking off the 21. Just beautiful roll reversal. And notice this is all with the risk on environment, right? Oh, I haven't released the scalping template yet. I've had it for many years. I just never released it. Let's go back to gold just because that's what we were eyeballing. And then we go to still some pretty decent gold. So far that 5K is holding. All right, let's get an update on the headline.
Euro pound holds steady as markets await ECB, Bank of England policy decisions.
XRP slides as retail interest climbs.
Euro, US dollar, sentiment-led recovery extends. Scotiabank. Why US dollar is the only safe haven in FX. Pound.US dollar price. Analysis. Pound extends gains as traders eye Fed Bank of England decisions. Macron says they will participate in Hormuz mission, but it would need Iranian coordination.
Tech stocks show mixed signals. Gains in financials and consumer cyclical sectors.
Australian dollar. Positive terms of trade offsets geopolitical risk. TD Securities.
Have a great day.